What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. In this episode, we're going to be going over all of the huge earnings plays that happened today, like Google, Facebook, Apple, and Amazon, and even Netflix. So we had some huge earnings come out after the bell today, and the market finished up slightly, but had a very volatile close. And the market is just very volatile, and it's kind of moving a little bit like it was back in March, just like the very sporadic movement and just heightened volatility. So we are coming very close to the election. We have COVID cases surging, and we are in earnings season. So that's why the market's very volatile. But we do have some great insight for today's video. If you guys aren't subscribed already, don't forget to subscribe to see our daily videos on our YouTube homepage every single day. But let's get right into it, Tom.
Yeah, CNBC reports that Facebook stock was down more than 2% on Thursday after the company reported a decrease in users in the US and Canada. Their earnings were actually pretty good. They had 2.71 EPS per share versus a 1.91 estimate, and their revenue was 21.47 billion versus 19.8 billion forecast by Refinitiv. And that's good to see, but in the US and Canada, Facebook's user base fell to 196 million daily active users from 198 million a quarter earlier. And the user base in Europe remained flat around 305 million daily active users for the third consecutive quarter. And the company cautioned that it expects its user base in the US and Canada to remain flat or even decrease more for the fourth quarter. And while Facebook's doing pretty well, if that user base keeps falling, that's just bad news to hear.
Yeah, I mean, like you said, their earnings weren't terrible. I mean, they beat their earnings per share and they beat their revenue. So they didn't have terrible earnings, but looking at their stock, it was just very flat. And really, who this is going to affect is pretty much anyone who bought a call or a put on Facebook for earnings, because it's not really up or down. And that's just going to make both calls and puts fall in value as long as it stays in this range. So they didn't necessarily tank on earnings. Their earnings were good. They weren't amazing, but they were pretty flat. And that's just going to screw over a lot of people who are trading their options.
Yeah, and another big reason why they didn't do very well is because a lot of people were actually boycotting them, and that's why they lost a lot of users because of all the political discourse with the election and stuff like that. So, obviously there's a lot of people on both sides who are kind of angry with Facebook and Twitter, to be honest. And Twitter just reported as well, and they didn't report good numbers either. And you can see they're really down in after hours today. They reported negative 0.06 cents per share versus oh no, that was actually the estimate. They had 0.04 was the actual, and then the estimate was 0.06 on the negative side. So they actually slightly beat earnings, but they also had bad user data, kind of like Facebook.
Yeah. What else happened with these other earnings companies?
Yeah, there was just too many today. Amazon reported in after hours, and they did pretty good. Their sales growth topped 37%, and that like blew past analyst expectations. But you can still see that even Amazon, which crushed expectations, is still down right now. And they had a 12.37 EPS versus a 7.41 per share expected EPS. And that's great to see. That crushed expectations by a lot. The revenue was 96 billion versus 92 billion. And the numbers are great on Amazon, but once again, they're just negative in after hours after reporting fantastic earnings. And this one really surprised me. I really expected Amazon to hold their levels up there.
I mean, a 12.37 earnings per share. They are crushing it. And to see sales growth of 37%, that is amazing. But, we're in a crazy market right now, and Amazon is basically doing nothing in after hours. And just like Facebook, it's kind of going to screw over anyone who bought calls or puts.
Yeah, and even there's another stock that ended up going up today, which was Netflix. But then even they ended up tanking off towards the end of the day. But they ended up rising on. They actually raised their prices, so they ended up raising their standard prices to $14.99 and $17.99 per month, and the old prices were $12.99 and $15 per month. So this actually sent their stock up 5% at the high to go ahead and close off the day. And it's just nice to see for Netflix. But just like all the other stocks, once after hours and the end of the day came around, they ended up coming down a little bit as well.
Yep. And then what happened with Google?
Google, yeah, even they they reported good earnings as well, and they had a 16.4 EPS versus 11.29 expected. And Google actually held their level up here at the top, but you can see that on this 1 minute chart, it was very volatile and it's been going back and forth. So I wouldn't be surprised if by market open tomorrow, Google was all the way back down at 1600 or something again. But it's just crazy right now. But they beat revenue by about $4 billion as well. And all these companies are just killing revenue, killing their estimates. And it just seems like they just can't get anything together. And I think a lot of that has to do, obviously, with the election coming up on Tuesday. And there's just a ton of people, I think, really being smart with their money right now. And they're trying not to over leverage themselves heading into the election.
Earnings season right now, it just seems like investors are very scared. We have Google beating earnings by $4 billion. We have another company, I forgot, I think it was yesterday or the day before, that beat revenue by $2 billion. And for the most part, these companies are either going to be flat in after hours or slightly up or slightly down. I mean, I just see investors, it just seems like investors are very scared right now. And, we could tell that by the VIX too. I mean, the VIX has been skyrocketing this week, and I think there's just a lot of signs that investors are kind of de-risking themselves ahead of this election.
Yeah, it makes a lot of sense. And I mean, I personally did that myself a couple months ago. I just took a lot of exposure out of the market and I'm just holding some cash, just waiting for some more long-term investments to pop up.
Yeah, we will definitely. I think we might have another shot to get in the market at a low price, depending on the election and if everything with COVID and the rest of earnings season. We'll know shortly, though. So now for our Discord member of the day, and today's member of the day is Darude1-78. So thank you so much for being a positive member of the Discord and just helping new members and just sharing great insight in the chat. Tom and I really appreciate it. So now let's get into our momentum plays for tomorrow. And the first one is NIO. So this stock had an amazing day today, up over 16%, breaking all-time highs. This stock was at about $2 back in March. Right now it's sitting above 31. Tom, what levels should we be watching for tomorrow?
Make them break above 32.20.
All right. And then with the next play, we have Twitter, but this is to the downside.
Yeah, Twitter, they just reported earnings as well. Make them go ahead and fall below 44.50, and that it might be volatile. If they keep going down below that, then just change it to 44.25 and then 44 even.
Yep. And then we have Netflix.
NFLX, go ahead and make them pop above 5.15.
Awesome. So Netflix and NIO possibly to the upside, and Twitter possibly to the downside for day trades. So now let's get into our unusual options activity for tomorrow. And we are looking at the Facebook 290 strike call options that expire tomorrow, October 30th. There was about $11 million put into this play. And clearly, looking at earnings right now, it looks like the smart money behind this trade was shorting these options because, well, it's either they were shorting them or they just lost a lot of money if they were long.
Or they're the not so smart money, right?
Right. So yeah, I would hope that they're shorting these options. Hopefully it's like a covered call or just a naked call option that's short. I mean, if they are longing them, it's not going to be a good day for them tomorrow. So now let's get into our comments from the previous episode. With the first comment, we have Christopher saying, don't worry about the stocks you're holding, which are slipping. If they are strong companies, they will bounce back to their prices before this dip. Watch out on playing daily puts as well. Hopefully it gets better after the election. So I definitely think it will, like the market will be easier to trade after the election. But that's a great point. All of these stocks that are slipping right now, I'm not saying to buy right now, but the lower the SPY goes, the lower the NASDAQ goes, all these indexes and stocks that just have, who are strong, great companies, the lower they go, the better price you can get in on them for the long term. So there's kind of like a push and pull with the market. Like if the market falls, yes, if you're already holding stocks, it might hurt, but it just gives you a better opportunity to set you up for the long term. With the next comment, we have SoCal saying, Mike and Tom, if I sell a put and say the expiration is November 20th and it starts to increase in value, can I sell before the expiration without penalty, or do I have to hold to expiration? I know you have to have some money in the account to cover the contract. So I just didn't know if I would have to have money tied up in case I want it out earlier. Thanks in advance. So yes, you can definitely close out of the contract. But if it rises in value, you will kind of have to pay a penalty. So for example, let's say we look at, let's go to Twitter. Yes, let's go to Twitter. So let's say with Twitter, let's say you sold the 40 strike put option for Twitter for November 20th. Right now, that option is going for $65. Okay. To do that, if it was a cash secured put, you would have to put up $4,000 because $40 per share, which is a strike price, 40, and then 100 shares is 40 times 100 for it's 4,000. So you'd have to have 4,000 tied up the entire time you were in that trade. However, let's say you sell it at when it's at 65 cents or $65. If that rises in value to, like, let's say it rises in value to 85 cents or $85, you can close that option at any time. However, once it rises and once you close it, that's where you will lose the money. So for example, if you short the option at 65 and then you buy it at 85, you're just going to lose $20. So that's your quote unquote penalty. But that's basically it. It's kind of just like if you bought the stock and then sold it later, it's just in reverse. So basically, if the option rises in value, the only quote unquote penalty you'll have to pay is the difference between the current price and then the price you shorted it at. So great question. With the next question, we have D saying, I know it's selfish, but I want another March low level so I can buy more stocks for a discount. And I bet a lot of other people are feeling the same way. I mean, if we see the market tank again, I think that would just be an amazing opportunity for so many people. I mean, if it does tank, I'm definitely ready to get in some great stocks for the long term. Tom and I have been talking about it a little bit, but I wouldn't doubt it. I mean, I don't know if we're going to see the market necessarily fall back to the March lows with the SPY at like the $218 level, but I think we might get something in between. I mean, if we look at the SPY, I mean, I wouldn't be surprised if we get down to the $280 level. What do you think, Tom?
Yeah, I think I could see that too. That'd be actually really close to the 1,000 SMA, and I don't think that that's too far off given how much the market's risen over the past few years. Like that's honestly not too large of a pullback. Like if we, if we have a really long-term chart here, and you just keep going back and back, just the way the market's rising, it's just almost like the norms. Like if we go back to '08, you can see how the market really dipped off, and we haven't seen anything like that yet.
True. I mean, a lot of it, like there are just so many variables. It depends who wins the election. It depends on if we go into another lockdown. It depends how the rest of earnings season goes. It depends on how COVID cases rise. There's just so many variables to give an accurate prediction right now. But if we do see the market continue to fall, it's just going to provide an amazing opportunity to a lot of people. And then we have Caldera saying, what do you guys think about ACI? What do you think, Tom?
AZI.
No, ACI.
Oh, ACI. Yeah, this stock, I mean, it's another pretty low stock. I think that they recently IPO'd actually, and it's not. It looks like it's pretty flat, almost back to their IPO price. I don't think it's terrible, but I don't know too much about them fundamentally, and I think with this stock, it'd be more of fundamentals at this point.
Yeah, so they just IPO'd, like Tom said. You definitely want to do your own fundamental research before investing in the company. Their chart doesn't look too hot, but it doesn't look terrible at the same time. And we have not researched them fundamentally. So it depends what you're looking for. If you're looking for a long-term hold, you definitely want to research them fundamentally. But if you're looking for them for a trade, Tom, do you have any like levels or anything for them?
Yeah, I mean, it looks like it's trying to hold somewhere around the 1450 level. It's hit there a few times, maybe like the 1450, 1460 level. I think that's a pretty good level. If it can hold that, I think it looks pretty bullish. And if we're on the daily chart, you can see it's had about 5 or 6 green candles over the past few days. So hopefully it can just go ahead and pop back up, maybe towards IPO price like 1650 or something.
Awesome. So, Tom, do you have any last minute stocks, options, or any insight for the market for tomorrow?
Yeah, my big insight is really going to be the SPY, and I mean, man, this is just a crazy scenario right now. This just keeps going down, and obviously the SPY is one of the bigger ETFs for the overall market. Obviously, the SPY and the QQQ, which is the Nasdaq, but the SPY itself, it really looks like it had a dead cat pounce today. It almost came all the way back down to daily lows, and I know that there was a lot of guys in Discord swinging SPY puts, and I got out early today on him, but I know a lot of guys are gambling on him. So hopefully, this can work out for him. And just shout out to those guys in the Discord.
Yeah, I mean, we are in one of the toughest markets to trade right now. If you can survive this, I mean, you can survive anything. The market is crazy right now. And, if you have a small account, now is not the time to take overly risky positions. It doesn't hurt to sit on the sidelines for a week or a couple of days, until after this election passes. You don't have to risk money every single day in the market, especially if you have a small account. So keep that in mind too. So thank you guys so much for watching this video. Tom and I really appreciate all the support you guys give to the channel through the form of hitting that like button, commenting down below, and of course, subscribing. Tom and I really appreciate it. If you guys have any questions, let us know in the comments down below. But other than that, thanks for watching.